5-year fixed rates skyrocketed leading into November, with interest rates going up by more than 0.5%. But unexpectedly, the Bank of Canada increased interest rates by only 0.5%, which led to a little bit of a reprieve, leading the market to believe that interest rates may not go up as fast as previously expected, which led to a slight reduction in 5-year fixed rates right at the beginning of November. But interest rates this month are still significantly higher than they were last month, and I'm going to show you all the details. But before we do me that favor and hit that subscribe button. And if you're looking to thrive financially, this is the place for you. So go ahead and turn on that notification bell as well. Okay, so this is an interesting month. This is the first month where we're seeing massive amounts of people start to have to renew their mortgages at significantly higher interest rates. This article from BNN Bloomberg discusses that more than half of Canadian mortgage holders are worried about payments at renewal. So in other words, if you got a mortgage in late 2017, you probably got it at about 2% lower than what you will be paying when your mortgage renews. And this has been something that I've been saying for quite some time. It's been a reason why we've promoted adjustable rate mortgages. It's because people who have 5-year fixed mortgages have a false sense of security, and a lot of them are going to find themselves in a situation where they're renewing at significantly higher payments and don't even see it coming. So if you've got friends, you've got family members that are going to be renewing into a higher rate and maybe aren't paying attention, it might be a good idea to point it out to them. I recently made a video on this exact issue, and I also gave a few ideas on how to deal with the coming payment shock and how you can potentially minimize it. And I'll link to that video at the very end of this one. So make sure you go and you watch that one as well, especially if you have a 5-year fixed mortgage that's coming up for renewal. But without further ado, let's get into the actual rates for November of 2022. So we're going to start, as we always do, with the 5-year fixed full featured mortgages. These are the mortgages that have all the bells and whistles. You can pay them down with your prepayment privileges. They don't have any restrictions that won't allow you to move to a different lender if you want to choose to, as long as you're willing to pay the penalty. And they're with monoline, not big bank lenders. And these monoline lenders almost always have significantly lower penalties, which is very, very important, especially if you're renewing, especially if you're getting a new mortgage, because you want to be able to refinance into lower rates when interest rates do start to go down at some point. And there is a high likelihood that they will, because central banks have a tendency to overshoot. We've already seen the Bank of Canada pulling back the amount that they're increasing interest rates. So you can expect that when we do hit a recession at some point, and we will, you're probably going to see rates come down. And if you have a 5-year fixed mortgage from a big bank, you aren't going to be able to take advantage of lower rates down the road. So these are the mortgages that I recommend. I'll also cover discount mortgages at the end of this video, discount 5-year fixed, but I don't recommend you take those, especially in an environment where you're going to lose your ability to get a lower rate down the road midterm if you decide you want to refinance and get a lower rate. So let's start with insured mortgages. Right now, the going rate for a 5-year fixed full feature is 5.29. In October, this was 4.84. It got as high as 4.49 in November here, but again, we're seeing a little bit of a reduction in interest rates due to that lower than expected increase from the Bank of Canada. Then moving into 20% down payment mortgages. These are the riskiest mortgages for the lenders because they don't have insurance, and it's the mortgage that has the least amount of equity, making it the riskiest for the banks, and they price that in. So for a 20% down mortgage, you're going to be looking at 5.49%. As you get to 25% down, you get a little bit of a break going down to 5.44%. 30% down doesn't make a difference, but when you get to 35% down, this is getting to very risk-free mortgages for the banks. You've got a large down payment. Even though you don't have insurance, these are priced at the same price as insured mortgages because they're at 5.29%. And then for uninsurable mortgages, you're looking at 5.64%. So these are mortgages that are refinance over $1 million or have a 30-year amortization. Now, moving into variable rates, the picture is actually very similar to what it was last month, with the exception of we saw that 50 basis point hike by the Bank of Canada, which has increased all these variable rates by about 0.5%, but the discounts remain the same. So with prime now being 5.95%, if you have an insured mortgage that is a variable or adjustable, you are looking at about 5.05%. With 20% down, you have a discount of 0.55%. With 25% down, same discount. 30% down, you get up to 0.75%. So your interest rate would be 5.2. Then moving to greater than 35% down, you get back into that insured style pricing. And then for uninsurable mortgages greater than $1 million, refinance, 30-year amortization, you're looking at prime minus 0.4 or about 5.55%. Now, moving into discount mortgages, and I have to start by giving you the caveat of what discount mortgages are. So these are mortgages where some of the features are stripped away in order to get you a lower price. And just like anything in life, you get what you pay for. So there are certain things that come along with these that can actually make the mortgage more expensive in the long run, even though the face rate seems to be lower. There are things like the inability to switch to a different lender if you decide you want to pay the penalty, things like the inability to refinance, and things like lower prepayment privileges. All of these things can play a major role down the road in preventing you from being able to make moves that can save you tens of thousands of dollars. So I really don't recommend these mortgages, but I want to make sure that you know what you're getting. And when you see them quoted on the internet, you can distinguish them from a full featured mortgage by simply looking at the price. So start by looking at insured 5.09. Again, seemingly great rate, but if interest rates go down, you're going to end up not being able to take advantage of lower interest rates because you're going to be stuck with this lender. 20% down, you're looking at 5.29%. 25% down, you're looking at 5.24. 30% down, you're looking at 5.24. 35% down, you're looking again at 5.09. And then the uninsurable rates for these get a little bit sketchy because these are lenders that typically want to have portfolio insurance. So we're looking at basically 5.64, not a huge discount for a discounted mortgage when you start getting into those uninsurable rates. And then looking at 5-year variable discount mortgages. Again, I don't recommend these, but if you're really rate sensitive, they might be a good option. Insured mortgage, prime minus 1.15. So this is getting to the point where you would be at basically 4.8% or under that 5% mark. 20% down, you're looking at prime minus 0.8. 25% down, again, prime minus 0.8. 30% down, you're looking at prime minus 1 or 4.95%. And greater than 35% down, you're looking at prime minus 1.15. And again, uninsurable, not a real big advantage here. So I just avoid it if you're looking at a mortgage over $1 million or refinance. Just avoid those discount mortgages altogether. You're going to pay a little bit more, but the reality is if you're buying in those higher price points, or if you're refinancing, there are other things that you're considering other than just the interest rate. So those are the mortgage rates for November 3rd of 2022. I expect there's going to be a lot of fluctuation again in November leading into December. We may see interest rates go lower. We may see them go higher. It's anybody's bet. So if you found this video useful, do me that favor, hit the subscribe button. And if you are looking to renew in the next little while, make sure you check out that video, A Serious Warning for Fixed Rate Mortgage Holders. It has some really important information in it. I'll link it right here.